Hi everyone. Let's take a look at problem 12-3A, where we're asked to put together the operating activities area of the statement of cash flows. Okay, we've got the Ilbert Company income statement in front of us, and we see they've got 7.7 million in sales and net income to the right of my mouse of 1,650,000. And we have 5 other pieces of data. They tell us about accounts receivable changes during the year, inventory changes, prepaid expenses went up 150,000, accounts payable to suppliers and merchandise decreased 340,000, accounts payable to suppliers of merchandise, I said that incorrectly, accrued expenses decreased by 100,000, and administrative expenses included depreciation expenses of 90,000. Now, the instructions below say, let me see if I can slide so you can see more. Prepare the operating activities section of the statement of cash flow for the year ended. Okay, so let's slide up a little bit. And you'll see that I started the problem here down below. I've put together the title, and then the first line is net income, and from the left of the mouse I can drop in 1,650,000. And why don't I put a $sign on that? We got to make that a little bit wider. That should work just fine. Okay, and then after we put together net income, the next item that we see in the cash flow from operating activities, when it's prepared under the indirect method, which this one is the area that's called Adjustments to Reconcile Net Income to Net Cash provided by operating activities. Okay, so let's slide a little bit more to give us a little bit more screen room here. And I'm going to indent. And usually the first item that appears is depreciation expense. Okay, now the way to approach this problem is the first thing you do is you look to the income statement and you look for non-cash charges or non-cash items, I should say, because they could be charges or income items. Normally the first item you look for is depreciation expense. You might also need to look for amortization expense or depletion expense if that applies. You also are looking for gains and losses, because anytime we record a gain or a loss on an income statement, the gain portion or the loss portion represents a bookkeeping entry where cash wasn't impacted, and the gains and losses may be associated with like a sale of a piece of equipment, and we'll record that entire sale of piece of equipment in another area of the cash flow statement, not in the cash flow from operating activities. So we need to back out the gains and losses if we have them. This problem we don't, but we do have depreciation expense. Okay, and to the left of the mouse it says depreciation expense was 90,000, part included in administrative expenses. Okay, so within that 700,000 we've got 900,000 of depreciation expense. And depreciation is a positive number, something we add. And then we go through the working capital accounts one by one to see what the changes are. So the first item we had was an accounts receivable increased 250,000. An increase of accounts receivable means that we have to fund that change. We have to fund that investment. Or when we look at if we hold everything else constant and nothing else changed and accounts receivable went up from the beginning to the end of the year, then that meant we must have taken in less money during the year from cash receipts from sales made on account. So as a result of that, we would say we had an increase in accounts receivable, and that has to show up as a decrease in terms of the adjustment to reconcile net income. So I'm going to show that negative to show that we had to fund that investment that increase in accounts receivable. Okay, then the next item they talk about is inventory. Inventory decreased. Well, think about that. If inventory decreased, then that means we probably sold the inventory and collected the cash from the beginning of the period of the year to the end. The way you do this is you assume that everything else is held constant. So as a result, that's a positive adjustment. In other words, we have $500,000 less of an investment in inventory, so we must have got cash proceeds in exchange for decreasing the inventory. See how that works? Okay, keep on going down our working capital, which is the current assets less the current liabilities, except for cash. We'll compute the change in cash at the end of the statement. Okay, so now we talk about prepaid expenses. They increased $105,000. If assets increase, then in the adjustments to reconcile net income to net cash, we've got to show that in brackets. And so I'm going to copy from here just to get some of the words in. And it would be an increase in prepaid expenses. Okay, let me slide down a little bit. The next thing we have is accounts payable to suppliers of merchandise decreased $340,000. A decrease in accounts payable means from the beginning to the end of the year we must have been paid more than what we were. So we'll type in decrease in accounts payable. $340,000. That has to be a decrease. Okay, let me state that again. I'm not sure I stated that correctly. If accounts payable decreased $340,000, then that meant we weren't able to borrow from our suppliers by the dollar amount, $340,000, from the beginning of the period to the end. So in other words, we've had to come up with a greater cash investment. Okay, next, after our decrease in accounts payable, the information we have is accrued expense payable decreased $100,000 during the year, and that works the same direction. Any current liability that decreases means it has a negative adjustment. So we need to show that $100,000 decrease, and this would be a decrease in accrued expenses. So that could be accrued utilities, accrued taxes, any other payables. All of those show up as a current liability. If they increase, it's got a positive adjustment. If it's decreased, it has a negative adjustment. And once we have all that, we can calculate the total change. I'll just sum all those changes. Okay, quick formula error, but Excel figured out what I was trying to do. And then we type in net cash provided by operating activities. And we take net income plus the net change. Something doesn't look right here. Give me 1 second here. Oh, here's the error. A negative got in front of there. I thought that didn't look right, so let me eliminate that negative. And that's correct. Now we have net cash provided, one typo here, by operating activities of $1,004,000. And that's the answer we're looking for. Thanks, everyone.